Welcome to Market Movers. My name is Benjamin Poole, head trader here at Verified Investing. In this video, I'm going to cover 4 different charts for you to identify where key support and or resistance levels are. So the first chart that I'm going to go over with you is the SMH. Let's go ahead and jump right into it. So here's what's going on with the SMH. You've got this low pivot here. Here was a secondary hit. Here was a third hit. And here was a fourth hit of this upswing trend line. On a technical basis, the fourth hit is about a 50% chance of it breaking or catching a bid. And as you can see, we're into a lot of support on the SMH. And on this fourth hit, we got a huge bid to the upside. Now, we did have a little bit of a pullback in oil, which is what catapulted all of this buying pressure up on the SMH. So what I'm going to do is identify key resistance levels. So what I'm looking at is this gap in the charts from the highs of 25th of February, 2026. So about a month and a half ago, this was the all-time high on the SMH chart. If we do get back into this level, this is going to be your first line in the sand or the first resistance level on the SMH. So this is where I'm looking to pick this up for a potential short trade for a day trade level if we can get up to this level. Now, on the upside, we always have to see where resistance trend lines are. So what I'm going to do is I'm going to actually connect this pivot top here. Let's go to the correct trend line tool, connect the pivot top, secondary pivot right here, and look at how price consolidated right alongside of this upswing trend line before getting this additional rejection all the way down to the lower end of this upswing trend line. So if price action does break above $426.16, then you're likely to push higher. And then your next level of rejection, depending on when it hits this upswing trend line, would be about $442 or $445. Again, it really depends on when it hits this. So on a swing trade basis, this is the area of resistance that I'm looking at to enter this for a swing short. And the reason I like this level is because of how many times this resistance level has been rejected initially. It has closed above it a couple times. However, this usually gives an idea that the bulls are in charge. And this is oftentimes what happens is a bull trap where the buyers get everybody on board. And then all of a sudden you have this huge reversal. So again, $445.03 is where I'd be looking to institute a short trade, and this would be more of a swing trade basis. If we decide that we want to sell off, your next level of support is $399.02, and this would be for more of a day trade level and maybe an initial point for a swing trade level, knowing you've got additional support sitting at these high pivot points right here in the charts. So this could be your average or your adds to the position if we can get a sell-off, and all the way down to about $373.81. So what I mentioned this is you never know which direction the markets are going to go. We're just playing probabilities. So on the basis of us breaking the all-time highs, then the probabilities indicate that you're likely to head higher. And if we get a rollover in the markets, if there's no resolution that's going on with the Iran war, the oil continues to surge or surges back up, the SMH is going to get driven to the downside. So we have to be prepared for that as well. So let's go ahead and go into the next chart, CL1. So this is light crude oil futures. What I'm going to do is I'm going to zoom way out in the charts. Let's go to the weekly time frame. So what I'm noticing on this chart is you're going to have some resistance. So this is off of that upsloping trend line. Okay, so I've connected this pivot top from the highs of July 2008. Here's that secondary hit, and then here would be the third hit. So if we get another surge to the upside on CL1, this $123.78 level is where I would start picking up crude LC1 for a short trade. This is what's continuing to drive the markets. As you can see, we have this huge red bar candle on the weekly time frame. Now, if we zoom back into the daily time frame, this still is at resistance level if we get another push to the upside. Like I mentioned, you have to be ready for downside moves as well. So what I'd be looking for is all of this price consolidation right into this area for support. If we can get down to about $84.18, as you can see, there was pivot low here, price consolidation right in this area, kiss this pivot high area, and then additional price consolidation right in this area as well. Again, all that is taking place at around the $84.18 level. As you can see, it's already kissed this level once and then got this nice bid to the upside. So on a down move, this is where I'd pick up CL1 for a swing trade. And then again, that level is $84.18. You will get some pretty significant support off of that level. NDX is another chart that I'm looking at as well. So what I've done is I've actually created this upsloping parallel channel. This goes back from the highs of August 2022, connects a pivot top here, and then you zoom in a little bit. Price again, the bulls got on board, pushes up, created this bull trap before all of a sudden you move to the lower end of this parallel channel. So where do I draw that parallel channel from? You had all of this price consolidation. Again, that did get below that. However, look at how many times this hit with price continuing to be support. We did have some pretty negative tariff news. Once price action got back above, put in this inverse head and shoulders pattern, and then off to the races for NDX, which means that if we get a little bit more of a pullback and we can get back down to this level of support, at 23,074.92. This is where you're going to get a lot of support. Right now, the resistance level that we're watching is the midline of this parallel channel. Look at how many times the midline of this parallel channel has been respected. This gives me further confidence that this is the correct parallel channel for the NDX. So for a swing trade basis, once we get up a little bit higher, if we can get up to about $25,227.17, this is where I'm starting my swing trade short on the NDX, knowing I've got additional resistance at these pivot tops right here, where the bull trap was that got all the bulls on board before this sell-off all the way down to the lower end of the parallel channel. So this is additional resistance at $26,134.51. And then your last level of resistance is the upper end of this parallel channel. And again, it really depends on when it hits this channel area, but $27,246 all the way probably up to about $27,500. This is where your resistance level is going to be. So if we did start a swing trade short level here, and then it got up 10%, we would be able to average our price in at this level and then average dollar cost average in again at 27,500. So this is why I like parallel channels. And then if we did enter here, our average price would be above this parallel channel, and I would look to take half off the table back towards the midline, and then ultimately wait for a retrace all the way back down to $23,856.40. because that would be likely where the upsloping or the underbelly of the upsloping trend line is. Last but not least, let's jump into the DXY. The DXY has this upsloping trend line that connects a pivot low from the lows of 2014. Here was that secondary hit from the lows of 2021. And now we hit it and close below it. Similar, but in opposite ways. This was a bear trap that got a lot of the bears on board. And then all of a sudden we had a nice surge to the upside. So on the DXY, here's what I'm looking at. This is really the line in the sand. The more often price action hits against resistance, the weaker the resistance level becomes. And so if we can get back above 100.228, then we have another surge to the upside. I would actually be looking for a move all the way back up to about 103.353 for your initial resistance. And then we'd actually have to take into consideration what the price action of the DXY is doing. If it consolidates right underneath this resistance, then we're going to have another surge to the upside, about $104.679 for these high pivot areas in this area on the chart of the DXY. On the downside, if the DXY does continue to sell off, this upsloping trend line goes back so far that it's going to act as a ton of support. So if we can pick this up about 96, excuse me, let me reset that. Right about the 96,921 level, that would be where I'd institute a long play on the DXY and then look for additional support at 95,575. Once price action breaks below that, if it does, your next level of support is going to be this pivot top and all this price consolidation right here, about 93,357. So a couple different opportunities for us to potentially play the DXY, the CL1, NDX, as well as the SMH. So that's what I have for you guys. Thank you so much for watching. And if you guys are getting something out of this, please make sure you're liking, you're following, subscribing, and most importantly, share with those friends so that way they can get the same market information that you're getting. And with that said, you guys have a great rest of your day and take care.